Hello there, guys. How you doing today? So today I'm going to reveal my strategy that I've been using to execute my trades. Uh, basically, these are the components of my trading strategy. As you can see, the structure is the number one. I need to know the structure of the market, which is the very important for me, just to find out which directions the market is heading, right? So structure is number one. Then I have area of interest such as order blocks, fair value gap. So these are the areas where I basically mark on the chart. And once the price, kind of approach to these areas of interest or point of interest, I execute my trade. I also take into consideration liquidity concept, liquidity areas as well, like previous high, previous week high, previous day high, session high, Asian session high, session low, uh, any equal highs, equal lows, where there is a liquidity available for the market to hunt. And last but not the least, which is the most important component of my trading, is volume confirmation. So volume is very important for me for my trading strategy, because if you're looking only at the price action, only on the candlestick, you are just basically noticing the half of the story, right? The full story will be revealed when you kind of you know take into account the volume, right? Volume tell you the real story behind the narrative the market is creating. So volume is, if you know how to read the market, how to read the volume in conjunction with the price action, um, I'm telling you, your trading will transform basically big time. I have seen my trading transform ever since I started using volume. So volume, which is like a VSA, volume spread analysis, the concept that I use in my trading, right? So these are the component that you have to be mindful of. I am mindful of, while I'm trading. Okay. Okay. So structure. So let's start. I'm just gonna depict what I mean. Basically, structure is the language of the market, right? And the market is making higher high, higher lows, you know which way the market is heading, right? Once you have established that the market is trending upward or downward, which is whatever the case might be, so you would know that which way you should be trading at. So it is very important to know which way the market is heading. If you don't know the direction, it will be very hard. Once you know the direction of the market, it will become very easier for you to trade the market. Okay, so this structure has to be understood properly, right? Higher high, higher lows, or lower high, lower lows in case of bearish market. So right now I'm talking about the bullish market. So price is making higher high, higher low, higher high, higher low, higher high, higher lows, right? In doing so, it is creating some sort of like area of interest, like I said, order blocks. These are the order blocks. Order blocks are the areas basically, or supply and demand areas, where basically market come and move impulsively, breaking the market structure, making these order block a valid order block, right? These are the areas, right? Right here. So every time market comes pull back or retraces, it breaks the structure with impulsive move. And when market comes back again to these areas, we look to execute our trade, right? Also, an area of interest would be like fair value gap. As you know, the fair value is like a gap between, it's like a three candle combination. The gap between three candle is is basically an area which we call fair value gap. I'm pretty sure that you guys know about the fair value gap. If you don't know, hit me up and I'll be able to make a video about this one. All right, so these are the areas, like for instance, like three candles going upward, creating gap in between. So the candle number one and candle number three, there is a gap. There's a gap between candle number 3, which is this candle, and the candle number 1 right here, right? So this gap needs to be filled. Let me, if I can draw it properly. Okay, super. There you go. So this is the gap I'm talking about. The wick of this candle and the wick of this candle. There is a gap available. So these gap needs to be filled because there are like lots of orders sitting right here which haven't been executed. So market kind of come back and pick up these orders in order to make a move, right? So these are the areas. Okay, so number 1 is structure. Number 2, the areas of interest, which is order block, also fair value gap, and the volume confirmation. Volume confirmation has to come around these areas. When we see volume confirmation, we basically execute our trade. I execute our trade. Before, what I used to do, I used to wait for the price to come and create some sort of a market structure shift, right? So sort of like this. Price go up and just basically go down like this, change of character, pull back, another break of structure, and after seeing that, we kind of execute our trade, right? This is what I used to do back in the days, right? But not anymore. I eliminate this thing. I only wait for the volume confirmation below. If I see the volume is confirming that, my setup, so I'm just going to execute my trade accordingly. I'm going to show you what I mean. All right. So let's go to my another chart right here, another depiction, which I'm going to show you what I mean. Okay, here it is, guys. So imagine this is the market making higher, 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 low, higher, 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 low. So we are basically in a bullish trend, right? Here, when the market come to our area of interest, like I mentioned before, like this is the order block right here, and market is basically coming. This candle, imagine this is the candle that's basically tapping to our area of interest, which is like order block and fair value gap, right? Once you see this candle approaching this area, what I basically see, I have to see like a high volume, ultra volume. I turn the volume indicator on, and I notice how big is the volume, and this candle is basically touching this particular area of interest, right? So this candle, there is a criteria to enter actually. So like for instance, this is like an uptrend in 1 hour, right? I consider uptrend for gold in 1 hour. 1 hour is my uptrend. As long as 1 hour is making higher, high, higher, low, I'm going to look to basically execute buy trade, right? So trend on 1 hour has to be up, making higher, high, higher, low, pull back or retracement to my area of interest, which is order block or fair value gap. Ultra high volume, when this candle is basically approaching this area, which is area of interest, I need to see ultra high volume. See, the volume on this candle is ultra compared to the previous candle's volume, right? So it has to be ultra or high volume. This candle has to have ultra high volume, and this candle has to have big spread, or it has to be sell candle or like a bearish candle. The spread of the candle has to be big. It should not be like a tiny candle like this. It has to have like a bigger spread, big spread candle, and the volume has to be ultra high. Once I see that, I basically count this candle as CBC candle, climatically buy candle, CBC candle. So once I notice this and confirm that I have ultra high volume, and the candle is approaching to my area of interest, I basically use my rectangular tool and mark the high and the low of this particular candle. Now, the entry criteria would be that another candle should go down and sweep the low of this ultra high volume candle. It is very, very important. Once this candle, the green candle, which is very next candle, has to go down, sweep the low of this candle, and closes inside as a green candle, right? Once I see that, I would know, okay, the low has been taken and my buy is confirmed. Now, the next thing what I notice is the next few candle have to go up and close above this CBC candle, the climactic buy candle. These candle have to close above. Either it could be two candle or one candle, whatever, but it has to close above the CBC candle. And there should not be a big wick on the upside. Could be like a big wick on the downside, that's fine, but should not be like big wick like this, should not be like this. The small wick is okay. This should be fine. But the wick on the low bottom of the candle is okay as well. As long as there is a small wick or no wick, I would consider as a momentum candle. Once this candle closes above, I can take my entry right here, enter like a buy. I can go long and put my stop loss right here. Okay. My target would be like a swing higher at this particular point. But I can also take partial in between, right? Once I have like achieve 1 to 1, I can take partial and I can let the other position run all the way up to this particular area, which is swing high. So, okay, so basically a 1 hour has to be in uptrend, making higher high, higher low, higher high, higher low, higher high, higher low. The market pull back to my area of interest, showing climactic buy candle, which is a big spread candle, has ultra high volume. It has to be sell candle as well. Okay. And it has to pull back to my area. Once I see that the high volume has been confirmed, I wait for the low to be swept. Once the low is swept of this candle and the next candle closes inside, I still wait. I haven't taken the trade as well right now. I'm waiting for another candle to close above this CBC candle. Soon as I see the candle has been closed above, I can enter. Soon as this candle closes, I enter my trade here. What I can do, if this is like a 1 hour chart, I can go down to like a 5 minute time frame or 1 minute time frame, uh, looking for this ultra high volume. Once I see this ultra high volume and the confirmation of my setup, I execute my trade. This is what I do. At the end of the video, I will also show you my live execution of my live trade, which you can have a look how I executed my trade. All right. So now you guys know the whole process. Let me show you on the chart, what trade I have taken. All right. So just give me a second. All right, folks. So this is a chart of gold. Normally, I trade gold most of the time. So as you can see, gold has been bullish. It's a 1 hour chart. So gold has been making higher high, higher low, higher high, higher low, higher high, higher low. Okay, so let me turn on my trying here the areas that I've marked. All right, so basically what happened here, so gold was broke the structure around this area. You can see structure was broken here and gold went all the way up and I was waiting for the gold to pull back to this area right here. The area is right here. My FEG is over here. Okay, and I was expecting gold to come around this area around this time, right? There was a liquidity has been generated here. You can see trend line liquidity. So I was hoping that, obviously gold is going to come down and kick these guys out and show me some sort of move from here. This was my area of interest or point of interest. So over here, I have this indicator called volume. It's just like a volume indicator that you can, you know, go to basically indicator and just write down volume. Simple indicator, nothing complicated, it's just volume right here, yes. And it's going to show up right here. I'm using Oenda volume basically. It is pretty good actually. It shows, good volume, valid volume here. So I'm using this Oenda chart. So 1 minute, 1 hour chart. So this was the idea, right? I was waiting for the market to come back right here. So when I saw market came all the way here, was pulling back, I saw this bar, which was like a 1 hour climactic bar, climactic CBC candle, right? So when I saw that, I switched to my 5-minute time frame. Let me show you right here. This was the area. Yes. So switch to my 5-minute time frame right here. And the price was basically falling like a rock, right? So this was the high volume here, candle right here. You see, notice the volume right here on this bar. This is the highest volume among all these volume. You notice it's a New York time. Basically, that's when I trade my trade. New York is pretty active. So the highest volume in this area is this volume right here, and this bar corresponds to this high volume, right? So once I saw that, I basically use my rectangle tool, this one. Okay, this was the situation like this. Okay, market is falling, pulling back to my area, which is like a gray shaded area here, and it was showing me high volume or ultra high volume. This was the candle. Now I like I said, I have to wait for the low to be swept. So let's see, low has been swept by this candle. Soon as the low has been swept, this is my basically area. I mark the high of the candle and the low of the candle, right? So like I said, I have to wait for the momentum candle to be closed above this CBC candle, right? It hasn't closed yet. It did around this area. This has a wick, but I consider this candle as a momentum candle because it has a smaller wick. So I executed my trade around this area for buy, put my stop loss right here. My stop was from here to there, almost 97 pip, right? But look at the result here. Market never came back and kept on running. So this was the trade I executed in real time, right? Look at the result right here. Okay. All right. So this was one of the trade that I've taken. Let me show you the trade. Actually, I marked all of my trade right here. Okay, so next day, which was 26th of August, market went up. This was the area of interest right here. So I marked my FVG. I was expecting market to come back around this area, which is what it did. It did come back and gave me this ultra high volume right here. And this was the candle, big spread candle, rejection at the bottom, which is a good sign. So I mark my area of interest right here, like the high of the candle and the low of the candle, right? This one. And I was waiting for the market to take the low, but low wasn't taken, but market did close above. It closed above, but I was waiting for the low to be swept. Low did not get swept at this point of time, right? So I waited for the market to come back down. It never swept the low, but market eventually closed up. So I took the trade over here. My stop was down though, down below this candle, and look at the result here. This is what I got on this area. So let me measure how much was my stop loss from this candle around here, 66, and I actually made almost one to one. So it was a quick trade. Another trade that I took was this trade here, right? This was also a trade that I've taken. Let me show you right here. So next day, which is 27th of August, right? New York time. That's when I trade. So I was basically market came came down. It took the liquidity of this particular range, went up, and during New York time, it basically slightly took the liquidity of this. It was not slightly, but just slightly came down, never took the liquidity. But I saw a big volume right here. Look at that volume right here. So I put my trigger line, my rectangle tool, I use it, and I put this uh, rectangle tool. I just marked the high and the low. And what happened? Market closed above, but it never came back. But I took my aggressive entry right here. Market never took the swept the low, but I took my aggressive entry. This is like an aggressive entry. Market could have come down and taken the low as well, but I was pretty sure because I saw the volume confirmation, so I took this chance and took the trade right here. So around this area, my stop was around 52 pip, but look at the result. So market never came at that particular day, right? So this was the recent trade that I took, uh, you know, on 28th Wednesday. Look what market was basically has taken the Asian high, and it was falling from the Asian time frame, actually time Asian session, and it was kept on falling. Came New York around 8:30. Yeah, it was 8:30 on 28th of August, right? So basically, this was the area I was eyeing on. This was a liquidity which market did take. Market took the liquidity of this particular swing low, and I was waiting for the volume confirmation. I saw the big volume at that time. This was the situation like this. Okay. So the ultra high volume, falling market. This was the CBC candle. I marked the high and low of the candle right here. I was waiting for the next candle to swap. It did basically swap very slightly, and the next candle closed above. It was momentum candle, so I entered my trade here. The stop goes right below this particular candle. I think my stop would have been around like 25 pip. Yeah, 32 pip. Yeah, 32 pip. And look at the result here. Easily 100 plus pips right here. 131 pip. So, in a nutshell, these are the criteria that I look for when taking the trade. So volume is the very, very important component of my trade. I actually shared, my this setup on my trading view in my ideas. As you can see, this was the setup as I mentioned that I took. So the gold buy setup, it was basically shared at 8:48 around this time, 15 minutes time frame, basically right here. All right, so let me show you what was the result of this particular trade. So it says gold spot, gold buy 15 minutes time frame. So this was the setup here. Let me show you. So it did played out all the way and still going up. So this was the setup that I basically shared with on my idea area here on trading view. I've been sharing all of my setup here. If you want to follow, you can check them out. All right, follow my Facebook channel as well, Password Forex, where I share my idea. Also, if you guys want, you guys can join my free Discord. I'm going to link the description. I'm going to mention the link in the description, and you can join from there where I'm posting all of my setup here there as well. So you guys can take advantage of that as well. All right. Well, thank you so much. Have a so good day. Bye bye.